Hello and welcome to another update video about gold. We take a look at the shorter time frame count on the gold chart from an Elliott wave perspective, and wanted to give you an update on the latest price action, any updates, anything new compared or in addition to what we already discussed in the last video. That's what we want to cover here today. What did we talk about in the previous videos? So first of all, my view is that we are in a bullish market for gold, and that 2024 is going to be a successful year for gold. Been talking about that already last year. And yeah, we've made a new high, right? That's all going according to plan. We had a reaction to the yellow support zone. We had a reaction to the green support zone. That was back in October last year. So we're climbing higher, and I can actually remove that green support zone now from the chart. I can remove the larger yellow box from the chart. These are support zones that you can use to possibly look for entries, if you want to trade this. But overall, you can see here, the overall idea is that a B wave low formed in February. This here is possibly a still unfolding 5-wave, not like that, 5-wave move to the upside, followed by a 3-wave pullback ideally. And then we could get, this would be a so-called 1-2 setup again, then a wave 3 of 3, 4, 5. And that's how we should grind higher towards the $2,500 region. Now, looking at the very short term, I mentioned to you in the last video that clearly, or I can only clearly identify 3 waves to the upside. Not yet 5. Silver looks a bit different. On the silver chart, I could already identify 5 waves up. Here, 3. Now, that means that either we get one more high, and then we have a nice 5-wave impulsive pattern, as per the white count. To keep that count alive, or that interpretation alive, we need to hold above the upper support region. So the wave 4, what I've labeled there as wave 4, would likely still be unfolding, to be honest. And the C wave could be an ending diagonal. So A wave down, B wave up, and then this C wave is unfolding as an ending diagonal. There's no need to change that interpretation as long as we're holding the orange support zone. Also, support zone hasn't changed compared to the last video. So I would actually prefer 5 waves up. So one more high seems still a reasonable interpretation. And what shouldn't happen is a break below 2,116. Well, that doesn't mean it couldn't happen. Of course it could. And if it does, then we are morphing into the alternate count, which would mean that in the yellow count, yes, we only have 3 waves up, but that means I could count that still as a wave 1. But then the pullback has to be considered as a wave 2. Could be a bit deeper. That means we have to give it a little bit more space. The question is, okay, why 3 waves up in a wave 1? Well, because we're dealing with a C wave. Yeah. What we're dealing with here is an overall ending diagonal pattern, and the third wave here is basically an A, B, C structure, and the C wave could be an ending diagonal, and then the wave 1 is a 3-wave move, wave 2 as well, wave 3 would be 1. But then having an ending diagonal in a C wave in an ending diagonal, yeah, hopefully not. I mean, ideally we are following here the white count. This looks a bit like a bullish flag. We can draw a trend line here as well. And I mean, they don't have to break to the upside, but it would be ideal. And would be very much in line with this wave count that this here could be a wave 4, which could result in a 5th wave rally. What do we need to see for initial evidence that the wave 4 is complete? So first of all, the orange box needs to hold, of course. Next support is at 2,136. I need to see a break above that B wave high at $2,186 as a first indication that wave 5 has started. Which level should wave 5 reach? Well, the minimum expectation would be a break above 2,204 or 2,203, which is this wave 1 high. But really, I can really only give you a target once we have the wave 4 completed. What we can take the length of waves 1 and 3 together, go to the low of the wave 4. Let's assume it comes down a little lower, maybe to that 38.2 fib level, and then 2,217 and 2,270 are the next targets. And below 2116, below the lower boundary line of the upper support area, yeah, I have confirmation that it's ideally the yellow count then, yeah, because a wave 4 shouldn't break below the 50% retracement. But because the yellow count is the less probable scenario, I'm rather looking for the high probability scenario, which is a 5-wave move up. And either way, after these 5 waves are complete, ideally we're gonna get this wave 2 pullback highlighted in white. So yeah, overall looking quite good for gold. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.